Yo, what is good, guys? Hope you're all doing amazing and are trading safely in the markets. It's your boy VGOK here, and in this video, I'm going to be breaking down a 1 to 20 risk to reward ratio buy scenario that I had on last Monday on US30. So, what exactly is US30? It's also commonly referred to as the Dow Jones Industrial Average, or the Dow for short. Now, what it basically is, it's a stock market index that is made up of the 30 largest stocks trading in the New York Stock Exchange and the Nasdaq, so the US stock markets. And it was initially designed to serve as an indicator of how healthy the wider US economy is. Also, something you guys should know is that US30 is one of the most volatile assets available to us that we can actually trade. So I definitely don't recommend trading it if you're still in the early phases of your trading journey, as its movements are very quick. Now, what we've got here are a set of screenshots, just indicating, the before and after sort of pictures of my trade. And as you can see on the screen right now, we have the before picture. And as we can see, we've got the entry around this 33,380 point. We have a 10-point stop loss, and the final TP that I was looking for was the around 200 points for the TP. And as you can see here, this is just outlining the rough area of my entry. Then moving on to the after screenshot, what we can see here is it's the same screenshot. Instead, I've got it on a higher time frame so we can actually see the main move. And having the TP, I believe it was roughly around this point here, which is around 33,600 roughly. Which gave me my 1 to 20 final risk to reward ratio. And also what we've got right here is a MT4 screenshot of the actual entry that I took. So we've just seen the screenshots of the actual trade that was taken, and now I'm actually going to go and dive deep into the actual breakdown of the full trade scenario, giving my higher time frame point of interest, my lower time frame confirmations as well. Looking at the whole trade as a whole on the 30-minute time frame right now, the 30-minute time frame was the time frame that I used to establish my higher time frame point of interest. And as you can see, the trade, it was placed on Monday the 5th of April, just around New York session, around the end. The entry time you can see was just after 1 p.m. So putting my session times onto the chart and zooming in, what we can see is just after 1 o'clock roughly was my entry, which is the New York Open. Now, working from the 30-minute time frame, this is where I got my point of interest from. What we could see through the Asian session beforehand, and the Asian session we can see was in this white section over here of the chart. Over the Asian session with US30, we saw an area of consolidation, an area where price met a certain level of supply as it could not break past it. It was struggling to break past it. It kept forcing price to the downside, and which indicated to me there was a valid supply zone in this area. From the London Open session and the run up to the New York session, we can actually see that price has actually reaccumulated just before it reached the supply zone again. So it's reaccumulated just before it reached the supply zone, and we can see that this reaccumulation resulted in this supply zone being taken out. You see that the price closed above the supply zone, and that gave me my higher time frame point of interest, which in this case was the 30-minute institutional candle right here. And as you can see, we've got this rally up of price that takes out this, and we've got this random sort of stalling of price in this candle. Price is going up nicely, and then it randomly stalls, consolidates, and then goes up. And that to me is where the manipulation lies, and where we can see that the institutions had a big part to play within that sort of area. Then going down into lower time frames to actually see, the confirmations actually play out. Now, when we're actually honing in on these lower time frames and actually monitoring the price action, we can actually really see, how the markets are actually really fractal in their nature. Now, I don't want to go into too much detail over it right now, but basically the whole idea of how the markets are fractal and how, you know, they will move in the same exact way on the smaller time frames as they do on the higher time frames. That's all I'm going to say for now, but in a future video I'll definitely be looking to explain these sort of concepts more to help all of you guys in your own trading journey. So what we're going to do now is jump into the 1 minute time frame to see how price revisited my previous 30-minute point of interest. And as you can see, the 30-minute point of interest was indicated by this purple rectangle. What I want to see is how price approaches this zone and see what technicals I can extract from the movements. So zooming into the actual price, we can see that price is coming back into the zone and it's creating a series of lower highs and lower lows. We have a high, a low, a lower high, a lower low, a lower high, a lower low, a lower high, and a lower low again, punching into our zone. You can then see if we zoom in, this was the last significant lower high because it created a lower low. You know, this lower high actually resulted in a lower low, so that is a significant one. And we can see after it bounced into my zone of interest, we actually got a break of structure above the significant lower high. So off the 1 minute time frame, we can see that the confirmation is there for the break of structure, so we could label that on. We have our BOS again, and once we have the BOS, it's then a case of finding a certain area for my entries. Now, the actual entry that I took was actually based off of a 3-minute candle. So jumping into the 3-minute candle, what we could see right here, and if I actually cut the chart off just after the BOS, so we've got the break of structure up into this candle. I'm going to cut it off there. So we can see the minute break of structure to the upside. And now I'm just going to play price to see how it would have reacted to our entry, which was based off of this last 3-minute candle, the open of this last 3-minute candle before the break of structure was valid. So there, as we can see as it's going along, it did go into a bit of drawdown in this section here. We then saw a really good movement up, and it was retesting that same open of that 3-minute candle a couple times here. Before it started to really go up. Then as we zoom out, we can see the movement. Now, my first take profit point was based off the fact that US30 actually has a high amount of volatility around the 2:30 p.m. 2:30 p.m. that is British time. As this is when the US stock market opens. In the US, in New York, it would be around 9:30 a.m., which is when the stock market opens. So for me in the UK right now, it's around 2:30 p.m. We see that volatility of when the New York stock market opens. So I take my first set of partials at the volatility spike. So as price spikes up at 2:30, and I start to see it slowly coming down again, I'll take my first set of partials around this area. And what we can see is that was roughly around a 1-to-9 risk to reward ratio right there for the first set of partials. Now, my final TP, which was at 1-to-20, after we see on the 3-minute time frame, if I take it up to that 1-to-20 mark and put forward the price along. So that was how I took my first TP and took my partials at that 1-to-9 risk to reward ratio around this level. And this was my final take profit point up here. And I had extended the time taking my trade up to this point. Now, it was that at this point where I saw on the 3-minute time frame, we had a potential bearish break of structure to the downside in this move here. And I knew at that point I wanted to sort of start getting out of my main position and closing off all of my order. And at this point, as it retraced back up into this imbalance fill, I thought that would be a good and wise spot to take my profits. And at that point, it had reached a 1-to-20 risk to reward ratio, as you can see right here. So there you go, guys. That was the 1-to-20 risk to reward ratio, which I caught on US30. I hope you really enjoyed the video and you gained a lot of value from it. And if you did gain value, please do like this video, please share and subscribe, and stay tuned for more of that trading sauce.